Hello traders, in this video, we'll be introducing a new trading view of indicator called the Stochastic Momentum Index SMA, which is essentially an enhanced version of the traditional stochastic RSI. We'll delve into how this indicator functions and explore how it can be effectively combined with other technical indicators to craft a highly profitable trading strategy. If you find this video informative, please don't forget to hit the like button. Let's dive right in. To begin, let's add the Stochastic Momentum Index to our TradingView chart. Simply navigate to the Indicator Search tab and type in Stochastic Momentum Index. Select the one created by the FxAccurateUS. Once added, you'll notice a dark line on the chart. Customize the indicator's settings, click on Gear icon. And after go to Style tab, change Stochastic Line, including changing its path increase for better visibility. See here, plots all are in second and fourth plot uncheck. Now all lines, levels and plot color adjust. The Stochastic Momentum Index is a variation of the traditional stochastic oscillator. It measures where the current closing price is in relation to the midpoint of the recent trading range for the purpose of identifying momentum changes in price. Like many oscillators, it provides traders with information about potential overbought or oversold conditions in the market. Now, this indicator is made up of very few components. Let's go over them real quick. This black line right here is called the stochastic oscillator. Its main purpose is to identify the position of the current price in relation to a recent trading range. Next, we have this red line right here. It's basically an exponential moving average or EMA. By comparing the EMA to the stochastic oscillator, this indicator is able to determine the beginning of bullish and bearish momentum based on the crossovers of the two lines. Next, we have this green and red background fills. The green fill at the bottom represents an oversold market condition. It's created whenever the stochastic oscillator goes below this blue line at the bottom. On the other hand, the red fields at the top represent overbought market conditions, and they are formed whenever the stochastic oscillator goes above this blue line at the top. Speaking of the blue lines, what exactly are they? Well, these blue lines are basically the upper and lower bands, and they represent the upper and lower limits of the most recent price range. The upper line is located at the +40 level of this indicator scale, while the lower line is located at the -40 level of this indicator scale. As mentioned earlier, they are used to indicate overbought and oversold levels in the market whenever the stochastic oscillator goes beyond. Now that we know what this indicator is made of, the next question is, how does it work? Well, it's really simple. In a bullish trend, whenever the stochastic oscillator, this black line, goes below the lower band, that indicates a weakening of the pre-existing bullish momentum. This also means that the market is in a pullback. Traders should pay attention to these pullbacks because they represent areas of potential trade entries. On the other hand, in a bearish trend, whenever the stochastic oscillator goes above the upper band, that indicates a weakening of the pre-existing bearish momentum, and it's also an indication of a market pullback. These pullbacks in bearish trends are important because they represent areas of potential trade entries. Now, speaking of trade entries, how can we use this indicator to take trades? Well, I'm going to show you. Now to trade using this indicator, here is how we're going to do it. Now in a bullish trend, for example, here, we're basically going to wait for the stochastic oscillator to go below the lower band. This indicates a pullback in a bullish trend. After we have the pullback, we want the stochastic oscillator to come back above the lower band and cross above this red EMA. This crossover indicates the end of the pullback and the beginning of a bullish trend continuation. And this is where we're going to enter our trade. To take a short trade, it's going to be the opposite. So in a bearish trend, for example, here, we're basically going to wait for the stochastic oscillator to go above the upper band. This indicates a pullback in a bearish trend. After we have the pullback, we want the stochastic oscillator to come back below the upper band and cross below this red EMA. This crossover indicates the end of the pullback and the beginning of a bearish trend continuation. And this is where we're going to enter our trade. Now, looking at these two trade examples, you will notice that they were both taken following the direction of the overall trend. How do you make sure that the market is in a bullish trend or in a bearish trend? Well, for starters, you could draw a trend line. You can like this, or like this, or like this. Now, as you can see, drawing trend lines can be super subjective. To avoid such subjectivity, you could go with an indicator called EMA trend cloud. To add it to our chart, we're going to open the indicator search tab and type in EMA trend cloud. Select this one by R. Westbrook J. R. Double-click on the EMA trend cloud to access the settings panel. On the Inputs tab, change the fast EMA length to 50 and then change the slow EMA length to 200. Head over to the Style tab and uncheck Fast EMA and Slow EMA checkboxes. After that, click OK. Now we have this beautiful trend cloud on our chart, which is just composed of the 50-period EMA at the top and a 200-period EMA at the bottom. The space between the two EMAs is filled with a green background color whenever the 50-period EMA is above the 200-period EMA, indicating a bullish trend. Conversely, whenever the 50-period EMA is below the 200-period EMA, the space is filled with a red background color signaling a bearish trend. This visualization makes it easy to see when the market is in a bullish phase or in a bearish phase without needing to look at the individual EMAs. Now to trade using this combined indicator strategy, here is how we're going to do it. To take a long trade, first, we want the market to be in a bullish trend. To confirm that, we just make sure that the EMA trend cloud is colored green and the price is trading above it. This indicates a bullish trend. Second, we want a pullback to happen within this bullish trend. To confirm that, we're going to pay attention to the stochastic momentum index. We're going to wait for the stochastic oscillator to go below the lower band of the stochastic momentum index. This indicates that the market is in a pullback within this bullish trend. Third, during the pullback, the price should touch the EMA trend cloud without breaking and closing below it. We will also skip it if it breaks and closes below the trend cloud like this. Next, after the pullback, we want the stochastic oscillator to cross above this red EMA, and that crossover should happen above this lower band. If the crossover happens below the band, that setup becomes valid. Last but not least, we want the crossover candle to be a bullish or a green candle like it is right here. Although entry conditions are met on this candle, so we're going to enter a long trade here. The stop loss is going to be set below the most recent swing low. And for the take profit, we're going to set it at 1:1.5 risk to reward ratio. We let the trade run and take profit. For short trades, we're just going to reverse all the conditions. First, we want the market to be in a bearish trend. To confirm that, we just make sure that the EMA trend cloud is colored red and the price is trading below it. This indicates a bearish trend. Second, we want a pullback to happen within this bearish trend. To confirm that, we're going to pay attention to the stochastic momentum index. We're going to wait for the stochastic oscillator to go above the upper band of the stochastic momentum index. This indicates that the market is in a pullback within this bearish trend. Third, during the pullback, the price should touch the EMA trend cloud without breaking and closing above it. Next, after the pullback, we want the stochastic oscillator to cross below this red EMA, and that crossover should happen below this upper band. Last but not least, we want the crossover candle to be a bearish or a red candle like this one right here. If it happens to be a bullish or a green candle, we will have to skip that setup. All our entry conditions are met on this candle. We're going to enter a short trade here. Set our stop loss above the most recent swing high. For the target, we're going to set it at 1.5 times the risk. We let this trade run and you can see its trade is profitable. As you can see, the stochastic momentum index indicator combines the core principles of momentum and price, giving traders a comprehensive view into the heartbeat of the market. Harnessing the SMI indicator isn't just about identifying overbid or oversold conditions. It's about gaining insights into the market's potential future direction, allowing for proactive rather than reactive decision-making. That concludes this video. I hope you found it valuable. If you did, please show your support by hitting the like button below and consider subscribing to stay updated. Thank you for watching, and I look forward to seeing you in the next video.